How's it going, everybody? And welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over the number one buy setup and the number one sell setup of the day. Before we get into that, though, we have brand new COT data to look at. So if you're unfamiliar, COT data is the commitment of traders data, institutional trader data. It is what big money, hedge fund manager guys, this is what they're buying and selling. And this information is made available to us every Friday afternoon. So this was updated Friday afternoon. It gets updated once a week. So this is the COT data for this week. Taking a look at the COT data, we can take a look at this bar chart right up top, which has all of the assets that we track in the Edge Finder listed from the most shorted assets on the COT report to the most long traded assets on the COT report. And what I find really interesting here is that we basically only have, as far as what we're actually tracking in the Edge Finder, we only have three different assets that are being heavily shorted by COT traders. In fact, they are the only three assets that are favored on the short side when it comes to the COT report. If we look at the fourth most, quote unquote, shorted COT asset, Bitcoin is just 51% short, and the US dollar is actually 49% short. So neither of these are really leaning towards the short side. They're practically 50-50, but the Swiss franc, the Canadian dollar, and bonds, actually the US 10-year Treasury yield bond, these are being heavily shorted by institutional traders this week. Like I said, we have a lot of stuff that's kind of ranging around 50-50, but then we have things like copper and oil and the pound that start to get into that long territory, and silver, gold, and the ZAR, the South African Rand, are actually our most long assets on the COT report this week. The latest weekly COT filing shows us the change from last week's COT report, to this week's COT report. We can see the total number of long contracts open on each of these assets on the institutional or on the COT report. We can see the change in long and short contracts from last week to this week, and then the overall long and short percentage. So for example, the Australian dollar is here at the top. We can see that there is a total of 101,462 long contracts open, 86,934 short contracts open, for an overall long short percentage of 53.86% long, 46.14% short. So it's really not leaning too heavily in the long direction. However, the change from last week to this week was a big one. We saw 19,538 long contracts opened on the Australian dollar and 6,238 short contracts closed on the Australian dollar, for an overall net change percentage of 7.07%, making it the biggest long change week to week this week. On the other side of things, we can see the Swiss franc down here with a total of 6,550 long contracts open, 29,404 short contracts open. That is leaning significantly on the short side of things. 18% long here, 81, almost 82% short on the COT report. And the change was actually 951 long contracts closed, in addition of 2,613 short contracts, for an overall net change percentage of negative 3.66%. So what was already getting shorted pretty heavily by institutional traders, the Swiss franc has gotten even more shorted this week from last week. So there we go. If you would like to pause the video and take a closer look into the latest weekly COT filing, feel free to do so. But I am going to move on into retail sentiment. Retail sentiment shows us what day traders, what the overall crowd, the majority of traders, what they are buying and selling. And we're going to start here with our major currency pairs. So we're looking at a contrarian signal here. This is just one of many things that we go off of to give our currency pairs, our indices, things like that, an overall bias here in the Edge Finder. We track all of these different metrics here. They all get added up and scored. And once you reach a +5 5 or -5 score, you get a bullish or bearish bias. And retail positioning is just one of many things, again, that we score here to give these overall biases. So retail sentiment is a contrarian signal because oftentimes, not every time, but oftentimes the overall crowd, what the majority of day traders are doing, is not usually what ends up, actually happening in the market. So Euro USD, Aussie USD, NZ USD, and USD CHF are favored on the long side, up over 60% by day traders, and that is giving us a bearish indicator there. USD CAD, on the other hand, is being shorted by over 60% of day traders, and that is giving us a bullish indicator there. Let's check out our minor currency pairs next. We can see all of these pairs here are up over 60% on the long side by day traders. These are our neutrals that aren't above 60% on the long or short side. And these pairs here are favored over 60% on the short side, giving us our bullish indication there. Let's finish up now with indices, metals, crypto, and commodities. And the overall crowd is really loving these things right now. They are favored up over 60% on almost everything on the list, really. The S&P 500 is the one thing that they are favored over 60% on the short side, though. Day traders shorting the S&P 500 right now, giving us that bullish indication. Let's head back into top setups, market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today. And remove our neutral biases so that we can get a good look at our full list of bullish and bearish biases of the day. Now we have one very bullish bias, and it is the Dow Jones with a +9 score. But if you're familiar with these videos, normally I usually stick to currency pairs because that's kind of what the Edge Finder started as. It has evolved into so much more than that now. We now have indices, we have commodities, we even have cryptocurrency on here now. But typically for these videos, we stick to currency pairs, and our strongest currency pair of the day is GBP NZD with a bullish bias score of +7. On the bearish side of things, we see a lot of different, or not a lot, we see a few different currency pairs. We see NZD CAD, Euro Pound, Euro Swiss, and Euro Aussie, but Euro Aussie is the most bearish scored out of all of them, -6 score here, bearish bias. So we'll take a look at Pound New Zealand, and we'll take a look at Euro Aussie, starting off with Pound New Zealand. So let's head into data scanners, Forex, and we're going to click on Pound New Zealand right up top here. Our most bullish bias. This drop down menu, actually, I've never really mentioned this before, but it's actually sorted by most bullish to most bearish. So if you know that you want to, break down, for example, the most bullish asset, you'll know that it'll always be right here at the top, and vice versa for the most bearish asset down here at the bottom. So just a little Edge Finder tip for you for all you Edge Finder users out there. But like I mentioned, Pound New Zealand bullish bias score of +7. COT data is a 0 or neutral score, and retail sentiment a +1 score. Taking a look at the COT data, we can see that the pound is favored over 60% by COT traders, so it is definitely trending in the long direction in the mind of COT traders, whereas the New Zealand dollar is closer to 50-50. However, the weekly change, or the weekly bias, was positive for both pound and New Zealand, which is why we're getting our neutral score there. Retail sentiment, on the other hand, is favored up over 80% on the short side, and that is giving us our contrarian bias +1 score here. Seasonality is a +1 score as well, and we can see that historically speaking, over the last 10 years averaged together, the month of October is typically a bullish month for pound New Zealand, although just slightly so at 0.07%. Our trend reading is a +2 score, and to take a look at the daily chart, we can actually take a look at price forecast here, and I'm going to search pound New Zealand. And this is what the daily chart for pound New Zealand actually looks like. So we can see towards the end of September that it was in a bit of a downtrend. However, it has rebounded since then and has been moving up pretty consistently over the past couple of days. And our price forecast algorithm actually predicts that that is going to continue to be the case moving forward into mid-October. Let's go back into our Forex scanner, and we're going to finish up with our fundamental data. So we see two red boxes here, GDP number, our GDP numbers and our manufacturing PMI with scores of -2 and -1. But services PMI and inflation both have scores of +1. Retail sales and unemployment rate both have scores of +2, and the employment change and interest rates are both neutral scores. Now, if you're familiar with these Edgefinder videos that I've done in the past, then I don't need to explain the GDP-A and GDP-B to you, but in case this is your first time watching, I'm going to explain this really quickly. So basically here in the Edgefinder, we have pages and pages of fundamental data that you can go and take a look at if you want to get really in depth into the fundamental side of things. However, in the scanner pages, we keep it short and sweet for you by just showing you whether or not they met, missed, or beat the fundamental data forecast. So for example, GDP-A here is going to be the pound because it is listed first. GDP-B is going to be the New Zealand dollar because it is listed second. And we want to know whether or not the pound or the New Zealand dollar missed, met, or beat GDP expectations. So the pound, GDP-A here, missed their GDP expectations, whereas the New Zealand dollar beat their GDP expectations, and that is why we have a -2 score, because we had a miss and a beat. Manufacturing PMI, on the other hand, we see that the pound met the manufacturing PMI expectations, but the New Zealand dollar, again, beat the PMI expectations, and that is why we have a -1 score. We see the opposite when it comes to services PMI. We see that the pound beat the PMI expectation, whereas the New Zealand dollar met the expectation. And again, we have the flip side here as well. Retail sales for the pound were a beat, and retail sales for the New Zealand dollar were a miss, and that is why we have our +2 score there. CPI in the UK was forecasted at 2.2%, and that is what it came out as, giving us our 0 or neutral score there. And CPI in New Zealand was forecasted at 4%, but actually came out lower at 3.3%, giving us our +1 score there. Interest rate change was a -0.5% change for the pound. That is a -1 score. And in New Zealand, we saw the same thing, but because it is the second currency and we are looking to buy or sell the pound against the New Zealand dollar, it was actually a positive thing in this case for the New Zealand dollar. Employment change forecasted at 0.29%, came out at 0.8%, a change of plus 0.51%. That was positive for the pound. And the forecast for New Zealand was at -0.2%, but it came out at 0.4%. And in this case, that was a -0.6% change here again, because we were looking to buy and sell the pound against the New Zealand dollar. The unemployment rate forecast in the UK was forecasted at 4.2%, but came out at 4.1%. In New Zealand, we saw it forecasted at 4.4%, but it came out at 4.6%. So there we go. There is all of the data and numbers backing up that bullish bias +7 score here on pound New Zealand. The other pair that we said that we're going to take a look at was Euro Aussie. So let's go ahead and get right into that. Bearish bias -6 score. COT is a score of -2, and retail sentiment sentiment a score of +1. We can see that the COT data for both the euro and the Australian dollar is pretty much 50-50. It is almost leaning bullish for the euro, but we see that weekly change here is negative, which likely dropped us below that 60% mark there on the euro. And the Australian dollar actually had a positive weekly change, but is still kind of neutral overall. However, we are getting that -2 score here because we saw a weekly negative change here for the euro and a positive weekly change for the Australian dollar. Our retail sentiment is 61% short, just barely over that 60% threshold that we need to give it a score here. Again, we're going off a contrarian signal, so the crowd right now is shorting Euro Aussie, and that is giving us a +1 bias here. Seasonality is a score of -1. We can see that over the last 10 years averaged together in the month of October, historically speaking, Euro Aussie does trade lower. Our trend reading right now is a score of -2. And again, to take a look at the daily chart, we'll head into price forecast and we'll search up Euro Aussie. And there we go. So we can see that for most of the month of September, this thing was in a pretty sharp downtrend and into the month of October as well. But over the last couple of days, it has had a pretty big bounce back, likely hitting this level of resistance here around the 1.63 area. And we'll see if it bounces off of that and continues to move down lower. Our price forecast algorithm predicts that that will be the case at some point in the next couple of days, or we'll see if it continues to trend a little bit higher and maybe we'll knock down this trend reading score here to a -1 or neutral score. But let's finish up with our fundamental data. We see GDP comes in with a score of -1. Same with retail sales and interest rate. Our inflation score is a score of -2. Manufacturing PMI, a score of +1. Services PMI, a score of +2. Unemployment change and interest rate are both 0 or neutral scores. So again, GDPA in this scenario is going to be the euro because it's listed first. GDPB will be the Australian dollar because it is listed second. And did we miss, meet, or beat our fundamental forecasts? So GDP in Europe was a miss on the forecast and it met in Australia. Manufacturing PMI, we see a beat in Europe and it met in Australia. Services PMI was a beat in Europe and a miss in Australia. Retail sales met in Europe and was a beat in Australia. Our inflation data forecasted at 1.9% in Europe came out at 1.8%. The inflation data was forecasted at 3.6% in Australia. It came out at 3.8%. Our interest rate change was knocked down by 0.25% or 25 basis points in Europe, giving us a -1 score. It remained the same in Australia, leaving it as neutral. And our employment forecast in Europe was 0.3%. It came out at 0.2%, which was a -10 change here, -0.10%, -0.1%. In Australia, forecasted at 0.34%. It came out at 0.33%, which was a negative 0.01% change. Our employment forecast was met in both the Europe area and Australia, forecasted at 6.4%. It came out at 6.4%. In Australia, it was forecasted at 4.2%, and it came out at 4.2%. So there we go. There is all of the data and numbers backing up that bearish bias -6 score here on Euro Aussie. I hope you guys enjoyed the video, and as always, if you enjoyed a look at the Edge Finder and you want to get it for yourself, you can find it down in the description below or on our website a1trading.com, and you can get it for a discounted price when you use promo code A1YT at checkout.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.